The art of short-term trading, timing and execution tips. Stay with me today because we're going to look at the 6 things you must do when you're short-term trading in order to get in and get out with profits. This is Crypto Intel. My name is Max. I'm your guide. Let's get started. Okay, so we're looking at short-term trading and we're talking about the best ways to get in and get out of the market, timing and also execution. So what's the first thing? There really are 6 things that you need to do in order to trade on a short-term basis. And by short-term basis, I mean anywhere from a few days to a few weeks or even a month or two. So what's the first thing right here? You need to trade with the trend. It's very important that you understand that when a market is trending upwards, you're going to look for more bullish trades. And when the market is trending downwards, you're going to have more success with more bearish trades. So, you can see right here, if we look at Bitcoin on a daily scale, here's a trending down market right here. Here's a trending up market. Here are sideways markets. So you need to be able to look and determine which way the market is going. Now, if you're trading short term, you're not going to be trading on the daily. You're probably going to be on the 4-hour, on the hourly. But the way that I do it is I start with the daily. I look at the big trend overall, maybe even the weekly too. But it's important to understand where we're at. So right now, this is October 3rd of 2023. You can see that we're basically in a sideways market. If I were to draw some trend lines here, you can see that I can put one here. I can put one basically right here, and you can see that we're up, down, up, down, up. This is a trending market. Now, there are ways to do this on a short-term basis. You could, and we'll talk about this in a few minutes, you could, start your long trade here when it's at the bottom, or do a short trade when it's at the top of the range here. It's a little harder to do that because there are some caveats you need to be aware of. But basically, you need to understand where you're at before you start trading, because on the daily, you see we're on a range. If we go down to the 4-hour, you can see that range, of course, expands because we're on the 4-hour. We go down to the 1-hour, it expands even more. And you can see that we've been in a range for a bit of time here. So the first thing you want to do when you're short-term trading is to make sure that you're trading with the trend. And so when I'm in an uptrending market like this, I'm going to be looking for up trades. When I'm in a downtrending market, I'm going to be looking for down trades. Okay, so the next thing you have to do when you are doing short-term trades is to wait for confirmation. Now, what do I mean by that? Well, when we are doing short-term trades, it's very important that we understand that the signal for the trade is the only time that we enter the trade. And we have to be crystal clear about what that signal is. And we wait for the signal to occur. That's the confirmation that we're able to take the trade in a profitable way. So the way that you do that is by looking at what your strategy is going to be. Now, let's just look at some basic trend line strategies. Okay, so here you see we have the top of the trend, here we have the bottom of the trend. Now, I can also draw a trend line going up and down here. Let's just make this a little bit better, right here like this. And you can see that there's some confluence things happening here. We have the top of the trend right here. We have the 200-day moving average right here, which is a good signal that we're moving into bullish territory on a stock or on a crypto like Bitcoin. And then we have the descending trend line that if we break, could be a good entry point. So what we're looking for here is confirmation via confluence. In other words, more than one signal. Now, you could say, well, when we break this trend here, I can enter in because I think we're probably going to go up. But if at the same time we're breaking the trend here, the trend line here, we're also moving through the 200-day moving average, and we're also breaking through this descending trend line. That's going to give you a much stronger confluence so that you can make the trade in a much better way. So you want to be able to understand where you're going to enter, and don't enter until you're confirmed that those things have happened. So when am I going to enter this trade? Well, we're right on the descending trend line here right now. If we move up and we break through here, that means that we've, on a closing basis now, on a closing basis, if we break through here, let's go down to, say, the 4-hour. And you can see still the same trend lines, okay? If we, on a 4-hour, break through here, and on a closing basis, we're above the 200-day, this is the 4-hour, but above the 200-day, above the descending trend line, and above your horizontal trend line here, I would start to make the trade, okay? Now, there's a couple of different trades setups that you can use to better achieve a higher probability of success. The two I want to mention today are the 1, 2, 3 breakout and a dip buy, okay? So let's first look at a dip buy. Now, when you're moving forward on a trade and you see that there is a very fast dip, like right here. You can see here we've been moving up in a trend, and all of a sudden we break through. Let me just draw the lines here. Moving up here, right? So this is kind of like a parallel channel right here, moving up, up, down, up, down. As soon as we start to break this, once we have a couple of days of down, and at least for my purposes, at least between a 15 to 25% drop. Let's see how much we dropped here in the matter of a few days right here. We're down like 20%. This would be a good place to do the dip buy. So let's take a look at a couple of strategies you can use in order to look for the confirming signals of when to get into a trade. We're going to look at a 1, 2, 3 breakout, 1, 2, 3, 4 breakout, and also a dip buying scenario. So let's first look at the dip buying. You can see here is a trend. We're going up in the trend, and you can see now I'm on the daily chart. You can see that we broke through this trend, okay? Now, the mistake is to enter the trade right here, all right? You're going to do a short. You could do that, but you don't know if it's going to keep going down or not. So what you want to do is you want to wait. You want to let the first leg of the dip happen, and on the next leg, whether this is the 4-hour or the daily, you want to see if it goes lower than the first one. If it does, that would be a confirmation that this is a good dip buying scenario. You can also just take a measured move of see how far the dip is. So if we go from here where it started, let me get this, and down you see this is a 24% drop. If Bitcoin or the stock you're trading drops by more than 20%, that's when I usually look for a dip buying scenario. I usually look to get in once it gets down in that range. Now, it could go lower, or it could bounce up and then bounce back down again. But that would be a good entry point. That is your confirmation. So two ways on a dip buying scenario. One is if you have multiple days or multiple time slots. If we go back to the 4-hour, you can see the same thing happening here. Let me get that right here. See, we had a big dip. we had a bear flag here. You see how this looks like a flag here? Going down, going up, and then we started to dip again. And once you see that it's going down, that's your confirmation. This bear flag here will be your confirmation that you can get into this dip buy and have a good probability of it bouncing up. You want to buy it as close to the bottom. Now you might get in here and it goes lower. You buy a little bit more here or add more to your trade and then let it go. So that's the dip buying situation. Now let's take a look at a 1, 2, 3 breakout. Here you have Bitcoin going up. It's touching this trend line, goes back down, it touches again, and then it breaks out. So when you're doing, if you were to take the trade right here as it breaks above the trend line, okay, you don't know if it's going to fake you out. You can see many times Bitcoin goes up and then it just goes right back down again. So what you want to do is you want to wait for a confirmation. In this case, you can take the trade here, put your stop loss right here, and if you do that, you're going to have a trade that has about a 5 or 6%. Say you think it's going to go up to the next trend line. That's not quite a good enough ratio. You want to really have a 2-to-1 ratio of loss to gain. So, the better way to do it is to wait for confirmation. What's confirmation? It breaks through the trend line. It goes up. You're saying, oh, I missed a trade. But it's always going to revert back. You see right here, it touches the trend line again. If you got in here or if you got in here, you would have the bulk of the trade right here. So waiting for confirmation is important. Now, what's the next step? The next step, after you wait for confirmation, you trade with the trend, then you want to make sure you use a stop loss and a take profit. Let's take a look at that next. So let's talk about how to do the stop loss and take profit, because in the end, we really can't time perfectly our trades. We need to work on probabilities. We need to work on, with our trend lines, with our different setups. But to protect ourselves, we need to have in place a stop loss before we make the trade, and we need to know where we're going to take profit. So let's take a look at this trade here, this setup here on the 4-hour. Let's go back. Let me just make it a little bigger here. Now you can see on the 4-hour, we had a close at this point right here above the trend line. So let's say we thought, okay, looks like we're breaking the trend line. Let's take the trade here. Now, here's how you do it. You get your trade setup tool, your long trade tool. This is where we're going to start the trade. Now, you want to go below the last low right here, the previous low. And you see that's a 4%. Now you want to say, okay, where am I going to take profit? Where do I think this trade is going to go? Well, probably to the next trend line if we go up here like this. If we just zoom out, you can see there's a nice trend line right here. And so we can see that right here we've set our stop loss. Now you can do this by just setting an alert. You can just go to the alerts here. Where is that alert thing at? Right here. And say when Bitcoin crosses, let me see where this is, 2,700, say, we're going to get out of the trade. Or it's just going to alert us, 27,000, that is. We just set that alert. If Bitcoin crosses below there, that will be our signal to get out of the trade. That's our stop loss. You can also set a permanent stop loss on your trading platform. And then the take profit is going to be the same thing. As we see Bitcoin breaking up here and getting close to our take profit, We can, take most of the profit here and then leave what's called a runner, just in case it keeps on going higher. But you see, in this case, Bitcoin, if I make this a little bigger so you can see it, Bitcoin did jump up, but immediately went back down. It was a fake out breakout. And this is what's going to happen sometimes. That's why you have to have a stop loss in place so that you can minimize the risk that you have and minimize the losses. Okay, so there's a few more things that we need to keep in mind when we're doing short-term trades to make sure that we protect ourselves and that we confirm a good sense of timing and execution. So what's next is sufficient liquidity. And by that I mean you need to be trading on a platform and with your cryptos, whether it's a Bitcoin or Ethereum or one of the other altcoins, that there is enough liquidity on that platform for you to be able to make the trades that you want to make. And as a rule of thumb, what I like to do is for every $1,000 that I'm going to put into a trade, I want to make sure that there is daily volume of at least 1,000 times that, or $1 million. So the way that I do that is I look at something like Masari here. You can see that if we click into, let's just click into, just for example, Matic, you can see that the real volume, and if we just click this, you can see this is the 24-hour volume that they feel is real volume in the past 24 hours. You see, this is $163 million. So that means that my $1,000, or say I'm investing $10,000 times 1,000 would be $10 million. There's enough volume there to cover my trades. This isn't as important when you're just trading Bitcoin or Ethereum, but once you get into, some of these smaller coins down here where you might want to do some quick trades, you do something like GMX, you can see that the volume is only 14 million. So if you're trading, more than $10,000 on that particular trade, you're going to be pretty much where I see as the limit of the amount of trade you can make. So when you get down to 1 million, 2 million in a trade, and some of these altcoins, you're going to see people on YouTube talking about trading altcoins that have a volume under $1 million. Well, if you're doing any kind of trade that is over $1,000, you're going to be at risk, I think, because there's not enough real volume for you to get in and out of the trade. It's going to, you might want to get out quickly, but there's just too many people trying to get out, and there's not enough volume there to help you get out. So it's important that there is sufficient liquidity on the platform you are using. And then finally, I think it's also important when you're trading short term to make sure that you understand the news. And I'm not talking about political news or the local news. What I'm talking about is what's going on with the economy. What's going on with inflation. Every so often an inflation number appears, the PPI index, the CPI index comes out. You need to understand on what days this is happening, because that is going to affect the validity, the volume, and the amount of trading that happens on that particular day. And you might not even want to trade short term on those kind of days. You want to look at interest rates when they come out. You want to look at the FOMC meetings when the FOMC talks about whether they're going to change the rates or not. That usually happens once a month or so, and you can follow those dates and understand that when significant events happen in the news, that's going to affect more your short-term trading than your long-term trading. So that's it for today. If you find the content valuable, please give us a like, sign up to get notified, and we'll see you next time.